Hi, and welcome to the round one review. So you've completed round one of the simulation, and if you go into your team competition, you'll get the results for your round one. So you'll see that under your team, you're going to now be in Y-2, which is what I call round two or year two, and you see that you have basically the original score. Year zero is baseline of information from the previous management team that was fired. Then you were hired and you made your decisions in year dash one, and these are the results of your decision. So for every decision that you increase, so here, revenues per share, that means revenues divided by the per share amount of shares outstanding, went from $12 per share to $25 per share, or $26 per share if you round up, and that's a 110% increase. But the maximum points they can earn in any category is 100. Now my quick ratio went down because I borrowed some money, so I lost some points in my quick ratio. And my debt ratio was a little bit better because my equity improved. My profit margin went from 40 to 50%, so I earned 26 points for a 26% increase in my gross profit margin, my operational, and my net profit margin. Now, you just completed reading chapter 3, maybe doing the homework on chapter 3. So you should understand how these are calculated and what they mean. So this is a great tie-in to chapter 3 in the textbook, because in chapter 3 we're talking about gross profit margins, operating profit margins, net profit margins, how to calculate them, what changes in the company help to increase them. So this is how the textbook and the course connect to the simulation. Also in chapter 3, we talk about total asset turnover. We talk about return on equity, earnings per share, return on assets, market capitalization, book value. So these are all things that chapter 3 explains, and that's why reading chapter 3, understanding chapter 3 in our finance textbook helps to better perform in the simulation, because you understand how these variables are calculated and what companies need to do to increase these variables. And it's very simple. You need to increase your profit margins. You increase the price of your vehicle that you sell the car at, or you lower the costs. Okay, so we come over here. My total asset turnover is lower because even though I have much more sales, my assets grew faster than my sales, and that's why I have a lower total asset turnover. My return on equity has improved. I created some equity by improving the profitability of the company. My earnings per share went up 200%. Again, the most points that can earn in any one area is 100 points. My return on assets went up 21%. That's my assets looking at my profits. So I get 20 points there. My market cap went up 200%. I got 100 points there. My book value went up 86%. My forecasting was more accurate, so I earned some values on my forecasting. I invested in my company, so by buying operational investments, I earned 100 points there. I had 100% investment, but I had a budget deficit. So I had a surprise budget deficit where I lost 100 points. Overall, 739 points is very good for round one. It would have been 900 points if I didn't have a budget deficit or cash deficit, which I'll explain how that happens later. Now, the first round is the easiest round to earn points because you're coming off a failed and flawed and horrible management team. Moving forward, when we complete round two, your round two results will be compared to your round one results. And since if you did very well in round one, it's going to be hard to greatly improve upon that. So after the first round, after you complete round one, every round moving forward, the average points are more like 300 or 400 points. So you can come over here to assessment and you get these star ratings. So my total asset turnover is poor performance. My percentile rank, just like the SAT percentile, 80% of teams did better than I did. And this is based out of, I think, the last 5,000 teams that use the simulation. And I have some tailored responses of how to improve that next round. My return on assets were also only 4 out of 5 stars. But by and large, in most other categories, my operational investments were a little low. My cash management was poor because I had a budget deficit. And my overall points was 4 out of 5 stars, which is above average. But I only did better than 66% of the players of the simulation. And that would be not just the people in our class, but all the classes currently using it across the world. Now, if I go into charts, I could see how I ranked compared to other teams. So if we look at this as a leaderboard, so we look at some teams scored over 1,000 points. Wow, that's fantastic. They did better than 96 and 95% of other players. Just fantastic. And most teams scored above 500 points. We had a few teams below 500, which they should re-examine. But by and large, these teams below 500 probably had poor gross profit margins. So many teams had 50. One team had an astonishing 60%. That's a perfect score. Wow. Other teams did well, 50%. Anything I think above 45% is doing very well. Any team, no team had lower than 40%, which is great, a first for one of my classes. But the teams that are at 40 to 44%, you need to increase those profit margins some more. We could also look at I'm going to look at my team performance chart. And this one, the most important chart here is the bottom one. So I'm going to look at my sales. So it looks like I made enough cars. The blue are my market potentials and the market out there to buy my car. So I satisfied all my market potential on 3 of my cars, except for economy. The market was 2161 cars. So there's 2,161 people who wanted to buy a car from me, but I only built 2,000 cars. So 161 of them had to go to another company to get that car they wanted. So that those lost sales went to a competitor. If I look at the industry charts, I see here, I can find my team. My team is 41. It's the dark green. So it's right here. This is team 1, and it goes in order. Then you can see here's our top performer, team 16. As far as net profits, my team 41 did 51 million in net profits. We have 55. Team 28 did 59. Team 16, 71. Team 9, 64. Team 11 and Team 12, both about 55 million in net profits. Fantastic. Points per round, we have here, again, we see Team 9 and Team 16. And if we look at Team 9, they had the highest points. I don't know where Team 16 is. Okay, Team 16, they had close to 900 points. Team 18, and another team over 900 points. So no one lost points, and every team came out, most teams came out a big winner this first round. Stock price. Now remember, so this team had 1,000 points. This team had 1,000 points. They only need 1,200 points more to secure their A in the simulation. But it gets harder from round 1, so I don't expect anybody to come close to 1,000 points in round 2. Okay, stock price per team. Team 16 was number 1 in stock price. They went from a $5 share to a $19 per share stock price, which is incredible. Team 28, Team 41 are the top 3 teams. So stock price increased here. How does stock price go up? Well, profitable companies, their stock prices will go up. Companies who buy back stock will also help their stock prices go up. Okay, sales per share. So we had 2 companies with the top sales. This doesn't mean they were number 1 in points or profits. They just were number 1 in sales. And that's great, but if I had a choice between owning 2 companies, one company that has $5 billion in sales and one company that has $100 million in sales, which one would I rather own? Well, first I would ask, what is the profits? The $5 billion company has $3 billion in losses. The $100 million company has $60 million in profits. Okay, I'd rather own the company with $100 million in sales because they have $60 million in profits. I don't want to own a company that has losses. So increasing sales or the most sales doesn't mean your company is the best, but it's definitely a good start. Okay, number 1 earnings per share is Team 16, 28, and 41. Okay, so let's go back up. So those are how you can kind of review the round, see how things are going with these charts. Then you can go into the industry. So if Team 9 and 18 did so well, go into the industry, find Team 9 and Team 18, and you can do a search, Control F, and just put in Team 9. and it'll take you over to Team 9. And then you could view and see, what did they do? What was their specifications on their cars? What is their total cost, their sales, their profits, their market potential? And you can kind of see how they built their car. And once in a while, I'll have a student email me, this is unrealistic that I get this much information about a competitor. No, it's real world. If I want to know about GM, I can look at their financial reports every quarter and their annual report. If I want to know about GM cars, I can look online and find specifically how much their car cost, how much the price of the car is, and how much specifics are there in their safety features, engine design, fuel economy, luxury features. So if you want to do the research, you can find out what the best companies are doing in a simulation and how to emulate some of their best strategic decisions. Now here we have the financials. So in Chapter 3 of the finance textbook, we start to introduce you to the income statement, the balance sheet, cash flow statement. So now from Chapter 3, you know a little bit more about how this income statement is created. And this income statement is what you use to calculate the financial ratios. So you can go over your income statement and you can kind of get a better idea here. You can look at your balance sheet and get a better idea here. Now there's a minimum cash balance of $25 million. And that's where I'm going to explain and talk about the cash surplus or deficit later. And you can even look at the cash flow from the previous year of operations, investments, and financing, and your overall ratios, how your ratios, the result of your ratios are calculated here for you. So and this is all explained in Chapter 3 of the finance textbook. So if you apply what you're learning in Chapter 3, you'll be able to plan and forecast a little bit better about how to improve your company. Okay, coming into sales, now we're in year 2. So now I can see that I have, because of the operational cost reductions that I made in year 1, I now have a cost reduction here. So if I put in 26, you'll see that this is the material cost, but it's now reduced by $1,200 because I made those operational cost reductions. Okay, so say the costs were $1,800 minus $1,200, I'm only going to cost me now $600. So it's important to make those operational cost reductions if you want to stay ahead, get ahead on your vehicles. So I'm going to try to improve my vehicle characteristics because the customer expectation ranges have increased. Customers are expecting more, and I can now increase my price of my car. And yes, I'm able to increase my profit margin, which is good. How do you do the sales forecasting? Again, like I said in my previous video, you need to go to the student manual. Open up the student manual and then look for the section on forecasting. And in the section on forecasting, they're going to tell you the growth rate of each vehicle per year. They're going to give you an example of what you could most likely sell in year 2. 27, 3,000, 21, 22. So this is what you would want to use when it comes to understanding your car's forecast. This is the average, if everybody was exactly the same. So if you feel your car has a better price point and better features, you could forecast higher. If you feel that your car isn't that well built and you're coming in below budget on marketing, probably forecast lower. Okay. So as I build out the car, I want to keep see my prices are high, so I'm not forecasting at the top level because my sales price is high, so I'm probably not going to sell. I'm probably going to sell below the market average, and I'm okay with that because I'm not trying to be the best. I'm trying to be the most profitable. There's a difference. So I get some errors here. I'm going to have to increase these. Oops. Okay, so I'm always trying to increase my profit margins by at least 5%. So I may have to decrease a couple things here and there to try to get that 5% increase because customers, remember you need to fill out these reflective observations as well. Customers are they might not notice the small changes I make, but my investors sure will. And if I don't improve my sales and my profits, my stock price will go down, my points will go down. And I don't want that. I want my points to go up, and I want my stock price to go up. And again, so I'm having a problem with this is really not going up 5%, so I might have to cut back and get that up 5%. Okay, so now I'm closer to 5%. All right. Now we finished the sales. I'm going to go into marketing. I'm going to skip over marketing because it takes a long while, but I'll notice that the marketing budget has increased, so I need to spend more money every round on my marketing. As the industry gets bigger and bigger, there's going to be more money to spend. So I need to make sure I don't miss out on losing customers by not accurately forecasting. And in the forecasting, again, in the user manual, you go to the user manual, it gives me an idea of where's the best place to spend money. For most, it's television and newspapers seem to be the most effective at advertising. So I want to break that, I want to convert this into how I spend my money. So newspapers are the most effective, and television, I'm going to spend most of my money on newspapers and television. So this kind of explains the advertising budget, as it changes every round. Depending on the round, this changes, and how to fill out my reflective observations and so forth. So you see here that I didn't put any money in newspapers last time, and that was a fail. So I'm going to make sure I get some money in newspapers, and here's the budget range. I'm going to try to be between these two numbers. I can go above or below. It all depends on how much I want, how big advertising is going to be for my forecasting of my cars. So, and this target here, the target age and income, this is for your reflective observations when you talk about your demographics. This will not affect how many cars you sell. It's more about the reflective observations, so you can match up your age and your income to when you talk about your demographics later in the reflective observations on the marketing page. So let me finish this up and I'll meet you back in production. I'm in production here and I need a new production plant. And make sure when you play the game that you don't have any excess or shortage. You stick to your forecast and how you're in your production and inventory totals. You don't want to have any excess, and make sure you don't buy more production plants than you need. And also, when you play the simulation, remember you're playing as a team, not as an individual. So don't divide up the work and say, Sally, you do round 2, George, you do round 3, Bobby, you do round 4. That's going to be a fail. And don't break it up where, okay, Jolene only does the sales page, Michael does the advertising page, John does the production page, and Samantha does the finance page. Don't split it up like that either. You need to meet as a team, discuss your decisions, and try to come upon the best set of decisions based on using 4 brains, not 1. That's basically how you'll fail. Okay, so I'm going to go and I'm going to increase my operational investments for the round. Here I don't need to buy a new production plant. I have leftover inventory. This is part of the reasons I had an unexpected deficit, is because I had cars I didn't sell. And when you have cars you don't sell in the previous year, that's how you get this current inventory, which you could resell next year. But the problem is I didn't have those sales and profits last year. So even though it looked like in my pro forma I had a profit, a surplus, I really had a deficit because I didn't wind up selling all the cars that I had promised to sell. So that's why you have those surprise deficits. And here again, I had a deficit. I had extra inventory on the trucks, and that's definitely a problem. And going down here, do I need to buy a production plant? Nope. And I don't need to buy a production plant here because I'm being a little conservative on my forecast. So I'm not buying any new plants I don't need, and I'll get some operational investments in here, and I'll finish the production. And now the finance page. Now that you've completed chapter 3 and moving into chapter 4, the textbook is going to talk to you about what a pro forma and what pro forma financial statements are. This is covered in chapter 4, pro forma financial statements. Maybe talked about a little bit in chapter 3, but this is basically, here's your actual for last year. This is your guess of what your financial statements will be next year based on your forecast. So based on my forecast, my sales should go up, but this is not a guarantee that my revenues will go up this much. I still have to sell all the cars I forecasted. That may or may not happen depending on how accurate I am in my predictions. Here's my predicted net profits. It's increasing. If I look at my predicted cash surplus is 27 million is my predicted surplus. So I have a little extra money to spend. I'm going to go ahead and buy back some stock. By retiring stock, I decrease my outstanding shares and increase my earnings per share. And I'm going to let's see what my balance is now. 22. I'm going to go ahead and just get a little bit of additional funds just in case I don't want to have another surprise deficit. So I have a little bit. So the first year or two, you're probably borrowing additional funds. You might even be issuing stock equity if you have an aggressive plan to maybe buy more operational investments earlier on. It really depends on what you're doing. But I have enough money now. I think I'm going to leave it like this. And bear in mind that this is a demonstration. These aren't the exact inputs you should make on your team. This is just what I'm doing very quickly to kind of show you how the simulation is working. Okay. So I can go in at any time, even though I completed the simulation, I can go back in as long as it's done before the processing is complete and make any changes I want. I just have to make sure that any changes I do, that I submit them at the bottom of the page when I'm done, and then I submit the whole simulation again at the end. So you can review your game, make changes all the way up until the night that the simulation is processed. So again, just to sum up here, Chapter 3 and Chapter 4 are very important to understanding the simulation and doing well in the simulation. In Chapter 3, we talk about financial ratios and financial statements. Chapter 4, we talk about pro forma financial statements and some forecasting information in Chapter 4, some budgeting information, both very helpful for doing well in the simulation. And if your team is acting like a team, they're working together in your meeting, that's going to make you an even more powerful group. So I look forward to seeing your results for year 2, which are due next week. The best of luck. Take care.